Now we are moving on to segment 13, that is assessment and audit. So in this, the first area is about various interest provisions under GST. So this is a recap of whatever interest provisions that we have come across in different places. So section 50, subsection 1 already we have seen for delay in payment of self-assessed tax liability. So what is the interest rate? 18% per annum, and from when it will be computed? From the first date after due date till the actual date of payment of tax. Previously we had this undue or excess reduction in tax liability, but that is not applicable now. So the 24% per annum interest and all is not applicable, that is omitted. But instead we have wrong availment and utilization of ITC. Then section 60 is about provisional assessment getting finalized. So whenever there is a provisional assessment and that provisional assessment gets finalized, so there is a differential amount that we need to pay. That differential amount we need to pay along with interest at 18% per annum. From when? From the first date after due date of the month in which provisional assessment is resorted till the actual date of payment. And section 16 already we have seen, that is for non-payment of consideration within 180 days from the date of invoice. So then we have to pay interest at 18% per annum from the first date after utilization of ITC. So this is not availment, so please correct it to utilization of ITC. First day after utilization of ITC till the date of addition of such ITC to liability and paid. And section 17 is what? Read with rule 42, differential amount, that is D1 and D2 computed every month versus D1 and D2 computed at the end of the financial year. So 18% per annum, first day of April of succeeding financial year till the date of payment of such difference. And both days, all these are, both days should be included. So I say first date after due date. So due date we will not include, but the first date after due date we need to include. So here everything, both days are included here. Then section 17 read with rule 43, reversal of ITC pertaining to capital goods, 18% per annum. Here it is first date after availment of ITC, that is correct. So here no need to change it to utilization. So date of availment of ITC till the date of addition or reversal. And section 56, there is a delay, like interest on account of delay in giving the refund. So what is the time limit within which the refund should be given by government? 60 days from the date of application. Otherwise from 61st day interest will be computed at what rate? 6% per annum till the date of refund. And suppose if the refund is arising on account of any assessment order or adjudication order by the authority, then in that case the interest will be 9% per annum. Again same, 61st day from the date of application till the date of refund. But this 9% per annum, so generally we will not be applying unless otherwise it is specifically given. So generally interest rate will be 6% per annum only whenever the refund is arising. And here due date, so if you see first date after due date, so first date after due date means what? First date after due date of return. Which return? GSTR 3B return. So usually 20th of the month following every month. And suppose if there is any delay in filing GSTR 3B, then interest will be payable on net liability, means that amount which is paid using the electronic cash ledger. For example, so GSTR 3B of a particular month, GSTR 3B of March, GSTR 3B of March 2023 filed on 30th April 2023. So there is a delay by how many days? So delay by 10 days, because the due date of GSTR 3B is 20th April of the succeeding financial year. So there is a delay by 10 days. For these 10 days, now we need to see in this GSTR 3B how much is shown as gross liability. So the gross liability that is shown in GSTR 3B is 8 lakhs, and we have balance in electronic credit ledger. So paid through electronic credit ledger is 5 lakhs, and paid through electronic cash ledger. So what will be paid through electronic cash ledger? 3 lakhs, which is nothing but FCM as well as RCM liability, correct? So what amount we pay through electronic cash ledger? FCM liability after adjustment of input tax credit and the RCM liability. So therefore here interest needs to be computed on what? So therefore interest equals to So interest is on what? 8 lakhs or 3 lakhs? 3 lakhs. And what rate? 18% for the delay, that is 10 divided by 365. So this is on account of delay in filing 3B. Now here what happens is that, so GSTR 3B of March 2023 filed on 20th April 2023 by due date. Okay, and we missed a liability for this March, for this particular month of March. Okay, so 25,000 rupees of tax not reported in 3B, which means we have not paid the GST liability with respect to 25,000 of March. And when are we discharging this? So this 25,000 rupees is paid in GSTR 3B of July 2023. You understood? So by 20th of August 2023. Now this 25,000 rupees whatever we are paying in July 2023, so definitely we will not pay fully by cash ledger, because in this GSTR 3B, that is this 25,000 we are discharging in 3B. But how are we discharging this 25,000 rupees? So that 25,000 rupees paid through electronic credit ledger, so say 15,000, and paid through electronic cash ledger 10,000. You understood? How I know this? So that 3B of that particular month I am discharging in this ratio. You understood or not? 3B liability of that month I am discharging in the ratio of 15:10 or 3:2 ratio I am paying, which means this 25,000 rupees also I would have paid using electronic credit ledger 15,000 and cash ledger 10,000. Now interest is payable, correct or not? So what is the period of delay? What is the period of delay? The period of delay is, so this 25,000 pertains to which period? March 2023. For March 2023, what is the due date? 20th of April 2023. So therefore we need to compute it from 21st April 2023 till the date of payment, that is 20th August 2023. So the number of days, if you see, in April month 10 days, May 31 days, June 30 days, July 31 days and August 20 days, that is 122 days. For this 122 days, interest will be computed on what? So 25,000 or 10,000? 25,000. That is what I mean to say as gross liability. Gross liability does not mean whatever is there as gross liability in 3B. Gross liability means whichever tax I have not paid, that amount I am paying partly using credit ledger and partly using cash ledger. I need to take the entire 25,000 and compute the interest. So therefore interest will be 25,000 into 18% into 122 divided by 365. So that's how we need to compute the interest. Now got the clarity related to this? Next. So now we are moving on to assessment under GST. We have total, 5 types of assessment: self-assessment, then provisional assessment, scrutiny assessment, then best judgment assessment and summary assessment. So section 59 talks about self-assessment. So what is self-assessment? Every person can compute how much is the tax payable. So, and he will compute that and he will file the return, that is known as self-assessment return. So section 59, who will be doing the self-assessment? Registered person, and note is not applicable, and every registered person has to assess the tax payable and furnish the return. And what is the time limit of the self-assessment? Due date of filing return. And any officer to take permission not applicable, withdrawal of order not applicable, no consequences. So self-assessment is completed. Now whenever a person is unable to compute the tax payable, self-assessment is unable to be computed. Why it is not able to be computed? Maybe the rate of GST is not known or the value is not known. Then in that case, so taxable person. So what is the status of the person? Taxable person. So by proper officer, is there any notice? There is no question of this. And the situation where the taxable person is unable to determine the value of goods or services or both, or determine the rate of tax. So here the difference is self-assessment will be for registered person, but provision assessment is for taxable person. And who will do this provisional assessment? By the proper officer. And why there is no notice? Because this person, taxable person, is only making application for provisional assessment due to that reason. So what are the cases where provisional assessment will be resorted? When taxable person is unable to determine the value or the rate. And what is the time limit within which the provisional assessment order should be passed? Within 90 days from the date of application. And what is the time limit within which the final assessment should be completed? Within 6 months plus 6 months plus 4 years, the final assessment should be completed. So 6 months plus 6 months plus 4 years from which date? From the provisional assessment order. So provisional assessment order, application to provisional assessment order 90 days, and provisional assessment order to final assessment order 6 months. It can be extended for a further period of 6 months and further 4 years, and that is the maximum time limit. Means literally 5 years. 5 years they can take to pass a provisional assessment order. And officer to take any permission, prior permission, no. And withdrawal of order also no. Now what is the consequences? So upon finalization, we need to calculate the liability. So differential amount either payable or receivable. So final assessment tax minus provisional assessment tax. If it is positive, means what? We have to pay that. And what is the time limit within which we need to pay? Anytime we can pay, but we have to pay interest. Interest will be at the rate of 18% per annum from the first date after due date of the month pertaining to which we have resorted for provisional assessment till the actual date of payment. Suppose if it is negative means what? So that is if there is excess payment. So under provisional assessment we have paid excess, and under final assessment it is less. So if it is negative, then get the refund plus interest at 6% per annum from 61st day till the date of refund. Okay, so we need to make an application, and after application from 60 days, within 60 days they have to give the refund. If not, from 61st day the interest will be computed at the rate of 6% per annum. But when we need to pay from the first date after due date till the date of payment, that to 18%. But when they give, final assessment will be completed, thereafter we need to make application, thereafter 60 days, and then only interest will be computed from 61st day. And next one, so we have scrutiny assessment. Scrutiny assessment will be done by proper officer. And when it will be happening, so any self-assessed return will be taken up for scrutiny by the proper officer. So registered person. So therefore self-assessment and scrutiny assessment are connected. So whenever we file a self-assessment return, that self-assessment return filed by the registered person will be taken up for scrutiny by the proper officer, and definitely they will be giving a notice. So because if there is any discrepancy during the scrutiny, so they will be giving notice for that reassessment. And situation, in order to verify the correctness of the return, the proper officer may examine return and seek explanation. Whether all returns will be taken up for scrutiny? No. So randomly the returns will be selected for scrutiny. And is there any time limit? No, not given. But logically, the time limit under section 73 and 74 should be followed. Why? Because after scrutiny assessment, what will happen? If suppose they identified that the person has to pay tax, and to recover the tax we need to pass an order. So recovery order is in 73 and 74. 73 time limit is 3 years from the due date of furnishing annual return, and 74 time limit is 5 years from the due date of furnishing annual return. So by the time when you pass the recovery order, then only you can recover, otherwise you cannot recover the tax. So even though under scrutiny assessment they have not given any time limit, but we need to read the demand and recovery section to understand, because there is a time limit for recovery of the tax. So within that time limit they need to pass the order. So that's the reason why logically before the order under section 73 or 74 they have to do. And any permission to be taken from the officer? No. And withdrawal of the order also? No. And consequences, suppose if explanation is not obtained within 30 days, that is a notice will be given. So for what purpose notice will be given? So like specifying this is the amount you need to pay. So it appears that this computation is not correct. So then either we need to accept that and we need to pay, or we need to give a reply. Suppose if explanation is not obtained within 30 days or extended period, or registered person fails to take corrective measures, then the proper officer may either conduct audit or initiate recovery. So recovery, when he initiates, what they will do, they will pass a order. Already notice has been given and they will initiate the recovery order under 73, 74, and once they pass the order, thereafter recovery proceedings will be initiated. Is it clear? Then next, best judgment assessment. Best judgment assessment will be applicable in case of section 62 and section 63. So section 62 best judgment assessment is, so non-filers of returns. So already we have seen in case of returns, so one notice will be given for non-filers of return, that is GSTR 3A. So after GSTR 3A, within what time limit we need to file the returns? Within 15 days. Within 15 days, if we are not filing the returns, so then what will happen? So the proper officer can initiate best judgment assessment, and any opportunity of being heard is given. Yes, that notice is there under GSTR 3A. Where registered person fails to furnish the return within 15 days from GSTR 3A notice, then proper officer will do the computation of tax payable. And what is the time limit within which best judgment assessment should be completed? Within a period of 5 years from the date of 31st December of the financial year for furnishing of the annual return to which the tax not paid pertains, which means that financial year say 2022-23. For financial year 2022-23, what is the due date of furnishing annual return? 31st December 2023. So from there within 5 years, 24, 25, 26, 27, 28. By 31st December 2028, they need to complete the best judgment assessment order. Best judgment assessment order time limit is equal to 74, section 74 demand and recovery time limit, 5 years. 5 years from the due date of furnishing annual return. Then officer to take any permission, no. And withdrawal of order, yes. Because once they pass the best judgment assessment order, we need to pay the tax as per the best judgment assessment order. But we have not filed any returns. So therefore, within 30 days from the best judgment assessment order, we can file the returns. If you are filing the returns, so actually best judgment assessment under section 62 is initiated for what reason? Not filing of returns. So file the returns within 30 days from best judgment assessment order, so that the order will be withdrawn and we will proceed to, assessment as per our returns. You understood? So order withdrawn if valid return is filed within 30 days of the order. So within 30 days from the date of best judgment assessment order, if you are filing the returns, means you are filing the returns, there is no problem. Actually best judgment assessment under section 62 is initiated because of non-filing of returns. You file the returns. So then as per returns only it will be the tax. So best judgment assessment order will be withdrawn. Whereas another best judgment assessment order is there in case of unregistered person liable to pay tax. So there is an unregistered person who has suppressed his turnover and he is required to pay tax. So on that person, the proper officer can initiate best judgment assessment. Here also a notice will be given for passing best judgment assessment order. So situation where a taxable person fails to obtain registration even though liable to do so, or registration has been cancelled under 29, means what? Notice has been given for cancellation of registration, but he is liable to pay some taxes. Why he is liable to pay some taxes? Whenever there is a cancellation of registration, before the date of cancellation, whatever is the inputs as such held in stock, inputs in WIP, inputs in FG and capital goods, ITC avail needs to be reversed. For reversal of that ITC, so suppose if you don't have that much of balance in ITC, we have to pay. So if there is any tax payable by that person after cancellation of registration, to recover that they will pass a best judgment assessment order. Time limit same, 5 years from the due date of furnishing annual return. Officer to take any prior permission, no. And withdrawal of order also not applicable. So here there is no withdrawal of order. So in case of one best judgment assessment order, yes. So which one? Non-filers of return. But another best judgment assessment order on unregistered person, there is no withdrawal of order, which means what the person has to do, either he need to pay as per the assessment order, or if he want, he can go for an appeal. So pay as per assessment order or prefer appeal if not satisfied with respect to assessment order. Understood? Then, sir, but how he can make an appeal? He is an unregistered person. How he can make an appeal? So he need to get registered, because this registration he will not do. Proper officer will suo moto make this person registered. The moment proper officer pass a best judgment assessment order on that person, when the proper officer is of the opinion that he is an unregistered person but liable to pay tax, then proper officer suo moto will mandatorily make him get registered. Means proper officer will give the registration number directly. So this is your registration number. So his permanent account number will be there. How his permanent account number will be there? First of all, proper officer will come to know this fact based on the bank account. So bank account of that person, some credits are there. So which is more than 1 crore or 2 crores, but he suppressed his turnover, he did not get registered at all. Now bank account will be linked to permanent account number, so means we know his permanent account number. So based on that, proper officer will suo moto get the registration number and give it to him. So therefore using that registration number, so this particular person needs to file the returns, whatever returns are there or appeals, etc. and all he need to know. But here unfortunately, once the best judgment assessment order is passed, even if he file return also, there is no other go. So he need to pay as per that assessment order only, or he can go for appeal. Then next one, section 64, summary assessment order. So students were asking for inter marathon, etc. and all. I am doing already. So some of your known people, if they are, please let them know. I am doing one free fast track batch for CA intermediate. So starting from tomorrow, it is in Mylapore Fine Arts Club. So free face to face I am doing. So if you know any inter students, do let them know. Okay. So some students have asked me here. So for them I am telling. Already I am doing. Okay. So timing morning 9 to 6. So section 64, summary assessment. Summary assessment is on the taxable person, and when this summary assessment will be conducted. So summary assessment, there is no notice. There is only one assessment in entire GST. Without notice, the assessment order will be passed. That is summary assessment. The summary assessment is like income escaping assessment. And who will be doing this summary assessment? Proper officer will be doing this summary assessment. And the proper officer has evidence that a taxable person has incurred a liability, and proper officer has sufficient grounds to believe that delay in passing assessment order may adversely affect. Say for example, proper officer visited the premises of a person and they have identified there are some goods, and these goods, so if they are delayed, if there is any delay in passing the assessment order, he may escape with payment of tax on that goods. So immediately they will pass a summary assessment order. Is there any alternative to summary assessment order? Yes, seizure order is there under section 67. So under section 67 there is a seizure order. Either they can pass a seizure order. Seizure order, if it is passed, the goods will be taken, and thereafter only upon payment of tax and penalty the goods will be released. That is under section 67 read with section 130. Okay, so that is one alternative. Another alternative is this summary assessment. Either they can resort to summary assessment or they can go for seizure order. So it is like department is having multiple powers. So whichever power they want to use, they can use that. So here the proper officer has evidence that a taxable person has incurred liability. What is that? Some goods are identified and on that goods tax is payable. And the proper officer has sufficient reasons to believe that delay in passing an assessment order may adversely affect the interest of the revenue. So then in that case, the proper officer may pass the provisional, like the summary assessment order. And is there any time limit? No, time limit is not given. But again, logically, this assessment should be completed within the time limit of recovery, because for recovery there is a time limit 5 years. So means by the time limit they have to pass this order. And officer to take any permission, yes. So because summary assessment order, there is no opportunity of being heard, no principles of natural justice. That's the reason why prior permission of additional or joint commissioner should be taken. Withdrawal of order, yes. So whenever the order is erroneous, that is those goods are actually exempted goods, and thinking it as taxable goods, a proper officer has passed the summary assessment order. So order is erroneous. If the order is erroneous, or if the person is making the payment as per the assessment order, so then proper officer may withdraw such order and follow the procedure under 73-74 recovery procedure. So that is with respect to assessment. Total 5, section 59 provisional assessment, section 59 self assessment, 60 provisional assessment, 61 scrutiny assessment, 62 and 63 best judgment assessment, 64 summary assessment. Then audit under GST. So this is 65 and 66. We don't have statutory audit under GST. So statutory audit under GST stands omitted. So therefore GSTR 9C is now not an audit report. So GSTR 9C is a self-certified reconciliation statement. And So two audits are there, departmental audit and special audit under section 65 and 66. So departmental audit, who will be conducting? So this departmental audit will be conducted by commissioner or any officer authorized by commissioner to undertake the audit. And who will be conducting the special audit? Chartered accountant or cost accountant nominated by the commissioner, not selected by the registered person. And in case of departmental audit, when that audit will be conducted at such frequency, so but that is not yet notified. So means now at present, whenever they want to conduct the department audit, they can conduct. Every year also they can conduct the department audit with respect to a person. Whereas special audit is during the any search or scrutiny or investigation, etc. So proper officer is of the opinion that the valuation is not done correctly or the input tax credit is not availed properly. So then in that case, during investigation or inquiry or scrutiny, it is found that value is not correctly declared or ITC irregularly availed, then the special audit will be ordered by the proper officer. And what is the time limit for completing the departmental audit? 3 months, and it can be extended for a further period of 6 months. Whereas there it will be 90 days plus it can be extended for a further period of 90 days. So there 90 plus 90 special audit, but departmental audit will be 3 months plus 6 months. And to whom the audit report will be submitted? In case of department audit report is submitted both to department as well as to the registered person within 30 days of conclusion of the audit. So the registered person, based on this audit report, if there is any discrepancies, he can make the payment of tax so that the show cause notice will not be issued. Or that person, if he has if he is certain that he is not required to pay, then based on audit report, so if at all order, notice and order is passed, he can go for appeal, means he can make the preparation accordingly. So but he don't have to go for appeal against the audit report. See, audit report is a precursor, and based on audit report, notice will be given. After notice, order will be passed. Okay, so if really there is a genuine tax liability to be paid, we can pay, so that notice and order will not be passed. Or suppose if department initiating notice and order based on the department audit report, so we should be prepared. Okay, either that is to make a reply to that notice, or suppose if order is passed, we need to go for appeal. So that is about this audit report given to the registered person also. Whereas in case of special audit, the special audit report will not be given to the registered person. The special audit report is shared only to the jurisdictional ACDC. And who will bear the expenses of audit? Expense of audit is borne by department, both cases, department audit as well as special audit. And scope of audit in department audit, as they can verify all records, like whatever records that we have seen, I formats, everything they can verify, and even trial balance or even income tax audit report, cost audit report, all records they can verify. Whereas in case of special audit, they can verify the records relating to value of supply or input tax credit, because there the scope of audit is limited to valuation and ITC. Then notice for audit. In case of department audit, a 15 days or 15 working days prior notice will be given. So suppose if the audit is to be conducted today, a 15 working days prior notice will be given. So for the purpose of conducting the audit, which means within this 15 working days, we need to prepare all the records, etc. and all, maintain those records. That is the meaning. And in case of special audit, there is no notice, means it is like a surprise. So one fine morning, so chartered accountant or cost accountant selected by the commissioner will come and knock our door, and we have to give our records for the purpose of audit. So direction to get audited to the CA or CMA will be given, but there is no notice given to the registered person for audit. Whereas in case if the audit is already completed under departmental audit, so or special audit, so again can they order the other audit? For example, department audit over, can they order special audit? Yes. Special audit over, can they order department audit? Yes. Suppose if company's audit is over, stat audit or income tax audit, again can they audit department, etc.? Yes. So audit under this section is mandatory even if the audit is completed under any other law. Then can the audit be conducted for part of the year also? Yes. So department audit can be conducted even for part of the year. For example, I am a newly started business. I started my business in November, and November to March. So can they do the audit? Yes. So not that only for the completed year they will do the audit. So even for the part of the year also they can complete the audit. You understood or not? So that is this. The period of audit to be conducted is for a financial year or multiples thereof. Thus, commissioner or any officer authorized by him by way of general or specific order may now undertake audit of any registered person for part of the financial year also.